Hey, everybody, thanks for joining me. I am going to be going through the 9 stocks I'm buying in September. I'm really excited for this one. I'm investing about twice as much money in the stock market as I normally do per month. There's just some great deals out there, a new position I want to open, and I'm really excited to dig in. Before we do, please click subscribe to my channel if you don't already. And please check out the link you see on your screen for a message from my sponsor, The Motley Fool. It's the best way to support this work I'm doing, and you can get the top 10 stocks to buy right now. As I mentioned, in September, I'm investing roughly double the amount of money I typically add to my brokerage accounts. A few reasons for this. One is just because I wanted to up my retirement contribution and make it easier to get my full contribution in this year. So a lot of this is in retirement accounts. And I just see a lot of great bargains in the market right now. Interest rates have risen more than expected in 2023. It's created some nice opportunities, especially in dividend stocks. So in all, I'm adding to 8 of my existing positions, and I'm starting one brand new position. I'm excited to tell you about them. So we'll start with some of the ones that I am adding to. This one shouldn't be a surprise. I'm doing the least surprising one first. Brookfield Corporation, ticker symbol BN. It's a position I've been building consistently throughout this year. I love that they separated their asset management business earlier this year. Brookfield Asset Management, ticker symbol BAM, now trades separately, but Brookfield owns 75% of it. There's a lot of growth potential throughout this entire business on asset management. In their operating businesses, Brookfield invests in things like in infrastructure and alternative energy assets, real estate. So a lot of growth potential in all the areas of the business. It's a very cheap value. They own a big stake of a lot of publicly traded companies, so it's kind of easy to do a back of the napkin, valuation calculation on this company. And it trades for a significant discount to its intrinsic value. Management has been buying shares kind of hand over fist this year, and I'm doing the same. So still building my position in Brookfield. Number 2, I'm going to buy some more SoFi. I kind of held off on this one for a while. It's one of my favorite bank stocks. So the second quarter was fantastic. SoFi is still growing rapidly, even in a difficult environment, and they are making great progress toward profitability. They should reach GAAP profitability by the end of the year. They are still on track to do that. And really, the reason that this one made the list is because it looked fairly valued after its earnings report when the stock rose significantly. But right now, it's 23% below where it was after the earnings report, despite fantastic results. It's just market pessimism right now is just kind of rampant, especially on growth companies like this. A lot of people think recessions are going to really hurt smaller banks like this. So I'm going to add a little bit to my SoFi position this month. Number 3 is Shopify, e-commerce company. Shopify is one that I bought in 2022 for the first time. Pretty decent position in my portfolio. Not one of my largest, but I love the renewed focus on its core business. Shopify got rid of its logistics business earlier this year, cut 20% of its workforce, really focusing on profitability and efficiency. And they just recently announced a deal with Amazon to offer Buy with Prime to Shopify sellers. They're planning on rolling this out by the end of September to all Shopify sellers who opt into using Amazon's logistics services. And it lets Amazon users check out on Shopify merchants with their Amazon accounts. The stock rose by about 10% after this deal was announced, and I don't think it's pricing it in enough. I think that's a very significant milestone that will allow Shopify's growth to accelerate from here. And I think the stock should be worth much more than its current valuation. So I'm going to add a little bit to my position in this month. Number 4 is General Motors. So this is a stock that I add to periodically. I just think it's an incredibly cheap value. Right now, they are in contract negotiations with United Auto Workers. And there is a possibility of a strike that's weighing on the stock, but that is a short-term headwind, not a long-term one. And it's important to keep that in mind. The valuation here is incredibly cheap, single-digit price to earnings multiple. And GM's management believes that it will be able to double revenue by 2030 and significantly raise profit margins. If it can do that, it will be worth many, many times its current valuation. The cruise division has had a couple setbacks too, which has been weighing on the stock. But again, temporary headwinds. The progress is still going in the right direction. They recently announced a partnership with Google to integrate AI solutions throughout GM's business, and just a lot going for this stock. And I think it will be one of the more valuable automakers in the world in a few years. So I've been building my position in GM for a little while now. Number 5, Disney, Walt Disney. Disney is at its 52-week low. That $150 billion valuation is the lowest we've seen for Disney in some time. It doesn't pay a dividend right now. You see an asterisk there on the slide. That's because Disney wants to pay a dividend. CEO Bob Iger says he's going to bring the dividend back sooner rather than later, so keep that in mind. But it's at a 52-week low on profitability concerns. But management's taking the right steps to bring back, excuse me, to boost its profits. The streaming division still has massive potential, and the market just completely just writes that off as a loss for whatever reason. The ad-free Disney Plus tier, it's increasing its price by 27% to $13.99 a month on October 12th. The market previously absorbed rate hikes very, very well. If it does the same this time, that could be a big step on the path to profitability for streaming. I just think Disney is a tremendous value at the current valuation, and I am adding to my position. Disney's already a top 10 position in my portfolio. Speaking of top 10 positions in my portfolio, Boston Omaha Corporation, by far the smallest company on this list, and one that I have not added to recently just because it is one of my largest stock positions. The stock is down about 35% this year. I did a video about a week ago that kind of explains why I think that is, so I'm not going to get into the reasons too big here. But the key takeaways are the second quarter was very strong for the company. Boston Omaha Asset Management is still a big opportunity. They're in the early stages of raising a fund to go after the opportunities they see in broadband infrastructure, which are massive, massive, massive. And if that's successful, that alone could be a giant driver of growth. And Boston Omaha is trading for right around its book value for the first time ever, other than one little blip in the 2020 initial COVID plunge. This is a stock that usually commands a pretty high valuation compared to its book value, and I see it as a kind of mispricing in the market right now. So number 7, these are all positions I already own. This is one of my largest, I think it's my second largest investment. Realty Income, ticker symbol is O. Real Estate Investment Trust, they focus on single-tenant retail properties. It's at its 52-week low, and this is a very interest rate-sensitive stock, plain and simple. The business is doing just fine, but rising rates put pressure on yield-focused investments like REITs. So we're seeing that happening right now. It's kind of creating a nice opportunity for people who are patient. A lot of interesting growth strategies lately. I mentioned they focus on single-tenant retail properties. They've recently added not one, but 2 gaming investments to their portfolio. They bought the Encore Boston Harbor earlier this year in a multi-billion-dollar deal, and they just announced they were investing $800 million or so into a joint venture to partially own the Bellagio on the Las Vegas Strip, kind of diversifying away from retail a little bit. Gaming is a very, very steady income stream. It's not like the Bellagio is going to stop paying rent. So if you have top quality gaming properties, are a great way to lock in some steady income. Most of them are on like 50-year leases. And they have a fantastic track record of growing their monthly income. They pay monthly dividends. They've raised the payout for over 100 consecutive quarters. So really great income investment. This is a big part of my retirement income strategy. All of this will be bought in my retirement account. 8, the last one that I'm adding to in September is PayPal. This is one that I just started building last month. And this is kind of one of my best value investments right now. Never thought I'd call PayPal a value stock a few years ago. But it really has become one. It's trading for about 12 times forward earnings. Massively, massively profitable business, roughly $5 billion of free cash flow annually that it's generating. It's been buying back stock with most of that recently. And there's a lot of potential to kind of add adjacent services to its PayPal and Venmo ecosystems to boost monetization. Over 400 million active users on these platforms. So I think PayPal still has a lot more potential than the market's giving it credit for. And I'm looking forward to building my position a little further. And last but certainly not least, the new position I am starting this month. I'm going to start a small position in Roblox, RBLX. I am not a gamer, but that doesn't mean I don't recognize the potential of gaming. Um, Stock is under a $20 billion market cap. That hasn't been the case in recent years. It is arguably the most successful metaverse company so far, the most advanced metaverse play. That's a new and fast growing market. The metaverse market globally is estimated to be about $69 billion in size today. It's estimated to grow to about $1.3 trillion by 2030. So, with Roblox in particular, the trend toward headset devices like the Apple Vision Pro and lower cost models could be a very big catalyst here. It's a high margin business, 76% gross margins, not net profitable yet, but it will be if it keeps that up and keeps growing. Um, the business has grown at a 64% annualized rate since 2019. Its bookings were up 22% year over year in the second quarter, and its daily active user base was up 25% in the second quarter, despite the difficult environment. And that's actually an acceleration from the first quarter. So the business had kind of a lull in 2022. Management's doing a great job of picking things back up and exploring other monetization opportunities, like advertising on its platform. It's got over $2 billion in cash. I'm excited to see where that business goes. And I completely understand this is one of my higher risk investments, but it's also a higher reward potential one as well. I think this business could grow to many times its current size in the next decade or so if it's successful. So hopefully you enjoyed that. I'd love to hear your thoughts on any of these 9 stocks, especially my newest position. Please let me know what you think. Leave me some comments. I'll do my best to address each one of them individually. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.